Okay, so Thursday, the consumer price index is forecasted to come down to 3.1%, which would be a really good step in the right direction in terms of the inflation fight, right? The fight to get inflation back down to 2% that the Fed's been on for a number of years now. If you get some progress on that, the market's likely going to react. You're probably going to see gold continue to push higher. You would see stocks do well. Arguably, you would see some other areas of the stock market maybe start to participate off of the prospect of rate cuts. If we're going to get rate cuts this year, inflation's got to come in light. I am still long gold. Here's gold on a 4-hour chart perspective. I've trailed my stop loss on this position, so I ended up holding tight, and it really ended up paying off here with gold because I was pretty much ready to chalk this trade up. I mean, I kept my stop loss. I didn't touch my stop loss, but when it was coming down like this, I was like, you know what? This is a lower high. We might see the end of this trade here. But then we bounced really strong off this 2300 level, and we've continued to show buying support, buying strength here on this gold move. And I've now put my stop loss into profit, so I can't lose money on this trade anymore, which is a great spot to be in. And I do believe personally that gold has more upside. If it comes down and breaks this kind of big move that it made on Friday, if it fails out and breaks to lows, that's going to be my trigger to go ahead and close out of the trade and take profits on the move that has been. So again, I think gold has more upside this year. There's several catalysts in my view that could continue to support gold moving higher. The central banks buying around the world, geopolitics still brewing under the surface, right? Taiwan, China, Ukraine, Russia, and Israel, Hamas. I mean, there are just several potential catalysts there that could cause some fear. And as a slight hedge, I have a long position in gold. At the same time, we have elections going on this year in the EU, UK. I know that the EU, the parliamentary elections were on Sunday. In the UK, there's also an election that has gone on, and this change of leadership always causes questions and concerns. And finally, the US, arguably the story of the year on the global front is the Trump and Biden round 2. And that uncertainty makes me like the idea of having a position in gold. And if I'm wrong, and if price, kind of fails out and we don't see, the follow through, then I'll just trail out. I've survived this drawdown on this trade, and with it pushing higher, I've trailed my stop loss into profit. So we'll see where this one goes. If we could take out the highs and keep pushing up, maybe retest the all-time high on a nominal basis, that would be very interesting to see around the 2450 level, which is the previous all-time high. Now, am I going to take profits at that level? No, because if we get to all-time highs, I would say there's a very strong catalyst that we could break and make new nominal all-time highs. Why am I saying nominal? Because on an inflation-adjusted all-time high, it is much higher than this. On a nominal basis, the highest gold has ever traded is 2450, but adjusted for inflation, it's like 3200 or more than that. It's I think gold has plenty of room over the long term to kind of adjust to the number of dollars that have been printed into the global system. But that is a longer term idea that I have. In the short term, I've got a trade on. I will remain bullish unless we see something really change on the interest rate forecast this year. If we see inflation trend higher again, if it reaccelerates, then yes, I'd probably stay very cautious with gold and maybe more on the sidelines. But right now I am bullish. It has also shown up on the Edge Finder as a top setup. Gold is getting a very bullish reading. I'm also long TLT, which is, U.S. bonds, U.S. Long duration, 20 plus year treasury bonds. So I have a position on that, and I'll show you my TLT idea.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
TLT. So TLT had a nice bounce. I don't know why what's going on with my trend line here. Had a nice bounce, came down really, really hard. I am slightly in the green on this one, not by much. I think my average entry is like right around 90, 92. So I'm not very much in the green on this trade, but I still like it. I think it has upside. And that would be basically a play on yields coming down this year. So we'll see if that can play out. In terms of other setups, I'm also short on USD CHF. And I need to determine if I'm going to trail a stop on this one. So USD CHF. So I shorted this currency pair. I haven't taken a currency trade in a minute. So this is my first trade on a currency for a little bit. Price came running up to this level here of resistance. I liked the idea. It was showing up on the Edge Finder as a possible bearish setup. Still is. And a lot of it is actually COT data. So the commitment of traders data, also just to reiterate, I put out a notification, but I'm sure people always have questions about this. The latest COT data, latest update is delayed this week due to the 4th of July holiday, which pushes back the CFTC's publication of it by a day. I wanted to come back to my thoughts on the metals too for a moment. In terms of the gold and silver ideas that I've had recently, silver I barely survived this trade. And what I mean by that is I was so close to getting stopped out. And with hindsight, I can say that, my entry here was a little early, but on the lower time frames, I really liked the way we found support here. This was a weekly trend line level, as well as support zone that looked really strong. I liked the fundamental potential catalyst there. It showed up on the Edge Finder. And when this big move happened, I was like, okay, well, if it gives me a pullback, I need to buy that. And I did, but I was a little early. So my entry was very bad in terms of with hindsight in my favor, right? Price came down again, and I had my stop loss really close to support. Now you may say, this is why. This is actually a really good example of why I don't put a lot of emphasis personally on like trying to trade like liquidity grabs or stop loss hunts. I know people love to talk about that topic, and if it works for you, by all means, do your thing. But for me, it's like support is just support. Don't complicate it, right? Price did come down here, but it didn't do, this is a key level of support that was pretty obvious on the chart, and my stop loss didn't get hunted or anything like that, right? My stop loss was just clear of the previous low, and you can see here that we didn't see any sort of liquidity grab before shooting higher. Has that happened to me? Plenty of times. I've had a lot of people comment on my videos like, yes, Nick, you were my liquidity, ha ha ha, right? But I just don't spend any time on that personally. Support is support. Keep it simple. The same technical analysis that's been used for a long time can still work just fine. And this, in this case, is a good testament. I stayed in the trade. I survived the bad entry, but with a really good stop loss. My stop loss held, and I never got hit on it. So the other thing is also, if everybody trades the idea of a liquidity grab, then wouldn't they just make it so that, like, if all the game plan was just to hunt your liquidity, and you're like, haha, I'll put my stop loss further down so you can't grab it. Well, wouldn't they just start doing this, and then you'd have to put your stop loss here, and then they would start doing this? Like, if everybody trades the same concept, if it's not a secret, then it's, something to think about. Anyways, for me, it's like, just keep it really simple. Support is support, resistance is resistance, and use fundamentals. Personally, that's how I trade. I'm not saying that's how you have to trade, but use fundamentals to get the general direction. And if you're right about the fundamentals, support should just hold, right? If you're really right about a bullish or bearish directional bias, and you have a good fundamental reasoning behind it, support should just hold. And if it doesn't, maybe you were wrong, right? So That's just my thought process on it. The pound actually looks really interesting in terms of this this, as you mentioned, this high of the year, I believe, is the 1.285 level or so. We're
Yeah.
back up to that level. Dollar's been really weak. Is that? Yeah, that is the high of the year. And they just had elections in the UK. I think that there's the Labour Party has taken over, and maybe there is a little bit of that in tandem with the US dollar being weak from jobs data, PMIs, etc. You've also got just at least the dust is settling, if you will. Regardless of who wins an election, one thing that I always like to think about is, once the dust settles and people are no longer like unsure and uncertain and fearful of what could happen, a lot of times the market can kind of smoothen out after that. So maybe some pound strength alongside some dollar weakness could lead to a break of the high of the year. So maybe seeing a new yearly high or year-to-date high on the pound, and that might actually be really interesting. Where do you think? And I'm just curious, if you were to mark up the pound US dollar and take a trade, how would that look? Like, how would you do you trail stops? Do you put a target on your trades? Like, how do you set up an idea like that?
Sure. So there's two approaches. There's the first one, which is similar to yours, which I'm currently doing with gold. The silver position, in which I'm sort of just trailing stops rather than having a hard target, which I more than likely will do with the pound dollar. As you said, we'll be breaking yearly highs. However, on a day-to-day basis, with more of a general trade, I'll just put a hard take profit at the sort of next support and resistance, and just trade like that with normally a 1 to 2, maybe 1 to 2.5 R&R. So in this case, I'd be very simply just looking for a break and retest of this previous high, this sort of resistance level, looking to enter off a bullish engulfing candle here. And then just looking to trade it up to sort of the 1.3, and then at 1.3 I would potentially take off 50% profit. Now partials aren't something I ever do, really. It's not in my trading plan. However, I am bearish on the pound overall. However, I think there could be money to be made in this particular move. But the only thing that's kind of putting me off really is just the distance between this 200 EMA and price. So normally when we get to sort of 1% or above, obviously 1% price move above the sort of 200, we quite often do see a pullback. So really, in an ideal world, we would see some sort of pullback back into this zone and then a break above, and sort of see this correction. But this is on the H4, so I'm not sure really how realistic this expectation is.
Sure. Yeah, no, I like that game plan in terms of the pound. Does seem to be moving, at least with a lot of momentum right now. As you mentioned, maybe a little stretch. Maybe we actually see a little bit of a pullback prior to a potential breakout. I've seen that a lot of times, right? That's very regular for price to come up, hit a level of resistance, and then if it breaks through that afterwards, it's a very strong sign that maybe bulls have taken over that spot. So very interesting one. The other one, James, is that you've had in the ECB world, or the European zone, they had elections on Sunday, and I think that there was some surprises there, but we saw the euro actually gap lower on the open this week and now regain the highs. What are your thoughts on the euro? Are you looking for a sell? Are you looking for buys? Do you have any opinion on this one?
Similar to pound dollar, I think, because as far as I'm aware, the initial gap down was more just shock value in the market. I don't think it was necessarily the market sentiment was bearish. I think it was more just because it was a shock. So I think again, because we've got some stability now in France, it's more clear where their politics are heading, and it's a very similar approach to pound dollar. I'd be looking for slightly higher prices, but I'm not convinced enough to actually get into a position. But it wouldn't surprise me if we came up to sort of the 1.9 area, or 1.95 roughly, up to these previous highs here. But yeah, we'll see. As I said, I'm not too invested in this market at the moment. I'm more just watching from the sidelines.
Sure. Yeah. And I don't know if you trade these, James, but do you trade the indices?
Yeah, I do.
You do trade. Okay. Do you have any thoughts on these ones? I mean, personally, I think you might have heard me talking about this earlier, but I'm long technology specifically. I was long energy. I got stopped out of it, but I'm long tech, which of course, largely reflected in the NASDAQ, which is very tech centric. But these things, man, are just on fire. And the indices, one thing that I find very interesting about them this year is the divergence in indices is ridiculous. The small cap businesses are performing, they're like slightly positive on the year. And then you have the S&P 500, which is positive on the year. But then if you took just like, actually I might be able to pull up, I know an ETF, like the Magnificent Seven this year are just like, this is an ETF that this is 2 times, so ignore the 2x leverage component, but this is the Magnificent Seven. Those are your Nvidias, Microsofts, Apples, Meta, Google, and I think Tesla's in there too. But the story here is remarkable. You have such a divergence in company performance in the US. You're seeing a small number of companies just have so much domination. And then the broader market, another one we could do is RSP, is the equal weighted S&P 500. So if you took all the 500 companies in the S&P 500, you just gave equal weighting, you had a portfolio that was, evenly distributed, that is doing not great this year. It's like flat on the year. So there's this divergence, and it's, to me, is actually kind of concerning personally, even though the rally has been so strong on the surface. When you look at the indices, that's true, but the average stock in America this year has not performed very well. So I don't know. I just wanted to bring that up and get your thoughts on generally the indices. Are you looking at them at all?
Yeah, it's a tricky one. I think, it's pretty obvious now, but the Nvidia move has been a huge driver. So it's a case of Nvidia is too high to buy, but it's also too high to sell in terms of its, no one wants to be selling that.
Well, and it's like, what else do you want to buy? Like if Nvidia and Google and Apple, if those are the winners and they're just racking in cash and everything else is so, no wonder they're just having all the gains, right? They're the only ones that look great.
Yeah, exactly. It's capitalism coming at its best, really. Like you said, the small caps, smaller businesses not doing too hot.
Winners take all, you know what I mean?
Yeah, exactly. It's these giants that are just pummeling through everything. But yeah, I think I'm very conservative when it comes to the indices. I only buy them. I will never sell anything unless it's a black swan event. So like COVID, for example. So I very rarely touch them in conditions like this. So for example, I would have potentially entered on this pullback here, but that's the only time recently that would have been a valid entry for me, just because it's just rallying up. So I've got a long-term investment account. I've just been I DCA every month, just put money into it, and that's invested in the NASDAQ and the S&P. But other than that, it's not something I would be really touching at the moment unless we do get a significant pullback.
I think that's wise because, I'm the same way. My one trade that I have on in the kind of indices world is, I'll show it to you here. Let me find it. So it's been a remarkable trade for me. But again, it's the frustration of just technology delivering. I've been long XLK, which XLK is the technology ETF, as I was mentioning earlier. I bought it as exactly what you just said. Like the one time I saw really good pullback opportunities was in April, which you just drew up on the NASDAQ. You'll see this chart looks very similar to the NASDAQ because tech and NASDAQ are, almost one of the same these days. But yeah, it's been tricky. The pullbacks have not been there for the market this year. And I think that's been really frustrating, but I kind of agree with you. Like you're not going to catch me like adding a bunch of positions up here as a trader. I trade the indices like you, mostly long. The only time I really will consider shorts is if we're like below the 200-day moving average and trending lower, and there's some serious bearish catalysts. Like 2022, I had a terrible year overall because I stuck too much to the long side, and I started making a little bit of gains back getting on the short side. I actually made money on the short side for a little bit of 2022, which helped to cushion a little bit of my drawdown. But yeah, it is hard to short them, especially when it's a bull market. We are in a bull market, but the last thing I would say on the indices is you have to be careful that you're not, when the music stops, getting caught with a huge position at the top heavy end of a bull market. And nobody knows when that is. But one way to diminish the chances of that happening to you is, as you've just talked about, pullbacks, right? Being conservative with entries, even on the long side, because people can get overhyped and overexcited about the long side and get themselves into trouble,
Well, I'd actually say it's becoming the opposite. I'm not sure about you, but on my Twitter feed, I'm seeing all sorts of things about the S&P, NASDAQ, Nvidia, now just collapsing. It's that sort of FUD or fear coming into the markets. And I am a bit concerned that a lot of less experienced traders are now looking to go short when, yes, prices are high, but there's no reason they can't go higher. And I think there's a case now of people are going to get liquidated trying to do both things. You'll get people, catching the top, still trying to buy, but also trying to sell it when it's still going up.
I've never thought about it that way, but James, that's so spot on, because when I look at Twitter, it's so extreme right now. Just like this chart kind of looks extreme, like it's like super, like you could say, oh, it's overbought, but other people would say it just doesn't go down. And both of those thought processes are so dangerous. And just like you're saying, like with my Twitter too, I see a bunch of people who they only go long, they're leveraged to the top, and they are, fully convinced that they figured this thing out. But it's easy to feel like a genius when the market's ripping higher. The Mark Cuban quote is, everybody's a genius in a bull market.
I was just about to say that.
Like if you learn that, markets only go up, you will be humbled like I was in 2022. I mean, I knew that they went down. I've experienced bear markets in 2018, 2020, 2015. I was just getting into markets, but I've experienced a couple bear markets. But the 2022 one was the first one that I've been a part of that was suspended. Like it was a long, if you had bought and held. This is the thing about buying and holding, which, there's nothing wrong with buying and holding if you have a very long time horizon, but this took you 760 days to get back to break even, had you been the unfortunate soul to buy the top, So that's why I think having, even if you're not an investor, having some sort of investment account where even if you throw $50 or $100 a month into the sort of index funds, you eventually will be doing okay, even if you do have to sit through drawdown. As long as you have that long time horizon and will accept the volatility and won't touch it, you're totally right. And for traders who are bullish on the markets, one thing that I like to do personally is not only trade one thing, I trade the NASDAQ and the S&P and sectors a lot, but picking sectors and also trading commodities can, give you positive gains even if the market's dropping. Like if your whole plan is just, I buy dips on the S&P, well, when it truly turns into a bear market, you're going to have a rough year or 2 years or 3 years. So, people can lose a lot of money in bear markets because their strategy breaks down. But if you're diversifying in what you watch, like I trade gold and silver, I know you do as well. And not to mention, you trade a basket of currencies, which gives you many different things to be active and participate in. So you're not just exposed to one thing, which I really think is cool.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.